Good evening, dear colleagues. It's Sunday, and as always, the project ForexTimes will review the probable movement of trading instruments for the upcoming trading week for the Euro, Gold, and SP 500 index. Let's dive right into it. First, with regard to the Euro, I would like to note the probable formation of a triangle. We observe an impulse movement followed by entry into wave A through a plane. Then we see the formation of waves B, C, D, and E. Theoretically, the triangle is already complete. Consequently, our primary scenario should be to trade on the buy side. I wish to emphasize to you, dear colleagues, that if I am right and you enter the market to buy and the price does indeed shoot upwards, please do not close your positions. Instead, set your stop loss levels to break even, i.e., at the buy order opening level. Under no circumstances should you close. Instead, keep adding to the buy. Let your profits grow, because we must instantly fix the losses as soon as the price exits a certain level below or above. From that point, our losses will increase. So we instantly fix and reduce losses while allowing profits to grow. Again, if I'm right about the potential growth of this trading instrument, it would approximately be 1.300, 450 points. So don't close it. Let it grow. Let it grow. Importantly, we can even roughly determine where. Like this, we make an impulse movement, which means the next is the triangle, and the triangle is our penultimate wave. Here we roughly see where the upward movement could form. Let's even forecast Fibonacci extensions to see where the 100% increase will be. So here we have 100% Fibonacci extension, and if I'm right and the trading instrument really goes up, the first target is 1100, the second target is 1276. These are the large targets, so don't you dare close at plus 50 points, plus 70, and enjoy it. Instead, just keep adding to the market as it corrects itself, then forms 5 waves, 2, 3, 4, 5, and corrects again. Buy, buy, buy. To give an example, we only have to look at the samurai. In the course of 14 years, this growth was again marked by a triangle in the middle of this growth. The impulse was a triangle and then an impulse. If I draw a channel like this, you will see how clearly the price came to the 100% target along the channel and then made a very large correction movement. But the point is that if you catch purchases here, let the profits grow. So, dear colleagues, if I'm right, please let the profits grow, because I recommend considering purchases for the next trading week, simply because this whole structure is most likely a flat surface, and the flat surface, you know, is 3, 3, 5, 1, 2, 3, 4, 5. So there is a 3, there is a 2, 3 connector, a double zigzag. There is 1, 2, 3, then 1, 2, 3 connector, 1, 2, 3. Here there is a zigzag, so we need to find an impulse in this movement. But here is a plane. So 1, 2, 3, 4, 5, 1, 2, 3, 4, 5. Here is a plane. Wait. So everything is probable. Indeed, I remembered. I apologize. I got confused here. I delivered a big lecture just an hour ago, and I'm just confused here. This is not an impulse movement of us, but most likely a zigzag. Even though it greatly resembles, and I'm tempted to call it an initial expanded diagonal triangle, but I prefer it here as a zigzag. Hence, after all of this overall formation, we see the corrective wave ABC in an impulse performance, namely the first impulse in a 5 wave, a corrective wave B in the form of a zigzag, and another 5 waves 1, 2, 3, 4, 5 in the form of an impulse wave C. After which we see the probable formation of an impulse movement in the wave, and now the corrective wave 2, in which you can catch a glimpse of 2 consecutive N-bombers. That signifies to us that at this moment, and we see it well, the professionals are trying very hard to protect this range. They are the professionals who are buying. Therefore, dear colleagues, all of this leads us to conclude that more likely than not, we'll see a growth in this trading instrument. Moreover, the price at the moment is even below the level of the market maker's loss, the lower limit of the profit range. This is a level at which futures contracts on the futures market of the Chicago Mercantile Exchange may most likely be opened for purchase, which can, in principle, push NOK to grow. Plus, the price is below the profit range of the market maker, and the market maker really likes to protect his range, especially starting from the second half of Wednesday. That is, it returns the price to it. Therefore, we consider POPO for this trading instrument for the upcoming trading week. Again, globally underline that with a high probability we are forming a triangle. A triangle is nothing more than a penultimate wave, and since the entry into the triangle was from below, the exit from the triangle is upward. What's most interesting, if I'm right in this sense, then ABCD and we still need to form wave E. Let's see how it started to form. It started with an impulse. This is an impulse movement. Consequently, if I assume that we are forming a triangle, then I'd really like to see a zigzag wave in the triangle. Now, if I want to see wave Z in the zigzag wave, so an impulse wave A corrective wave B, and an impulse wave C, after which we would be looking for purchases. So for the upcoming trading week, even those of you who are itching do not need to sell. Dear colleagues, do not sell. It is better to wait for the structure I just drew and try to buy again after the correction ABC, which will not go beyond the minimum value of wave C. Because if we have a triangle with U, then wave E should not under any circumstances exit. Because if it does, the triangle breaks down and turns into an ordinary corrective structure. Here, everything will simply need to be reviewed. And another moment, dear colleagues, since it is a holiday in the United States of America, I think you noticed that I am not saying anything today about the data from the Commodity Futures Trading Commission, which shows the medium-term interest of the Chicago Mercantile Exchange. I do not do it for the simple reason that the reports were not published on Friday evening because it was a holiday in America. Most likely these reports will be published on Monday evening or Tuesday morning. As soon as these reports are published, I will write about it in my everyday morning forecasts. A little moment for gold, dear colleagues. The thing is, when triangles are formed, there's always another variant, not just a triangle, but also a standard classic correction. Namely, we enter into a triangle 1, 2, 3, 4, 5, A, B, C, D, E, and exit. This is the classic triangle. But what do we do if wave E breaks through wave C's minimum? Then the structure changes to an ordinary corrective model. And already here, we look at what may be happening with us. Wave W can be considered as X, and then we start to decipher and see how all this might end up. I'm pointing out that at the moment, as I suppose, the correction, the key word, started with an impulse. The thing is, if this is a correction, then the impulse wave is a B, and then the impulse wave is C and a reversal. But what if the impulse passed, then the correction, then the impulse, correction, impulse? And this is a very big question. For a simple reason, then I can say that this is a common correction 1, 2, 3, 4, 5. Excuse me, it's not a correction, it's a 5-wave structure impulse. If we pass such an impulse, then after it, there's a correction, and then we will sell. That's the point. So how should we act in this situation? Basically, it isn't complicated. Once the impulse, the correction, the impulse passes, we have this low wave, the minimum wave. The fact is, if we have a 5-wave structure, then it has a clear rule. Wave number 4 cannot absorb the low of wave number 1. And in this situation, if we see an impulse move that engulfs the minimum of the wave, we can clearly say that it was an ABC correction, and that now it is wave 1 of an impulse with wave 2 correction, and we are moving up. I'll explain why an initial diagonal triangle cannot form in this structure. In reality, an initial diagonal triangle is also an impulsive move, But in an initial diagonal triangle, waves 1 and 4 do not overlap. Thus, if we assume this is wave 1, this is wave 2, this is wave 3, and this is wave 4 of a diagonal triangle, it means that wave 2 should be a corrective pattern, such as a zigzag. If we see an impulse move that engulfs the minimum of wave 1, and it is not a zigzag, then this is not an initial diagonal triangle, and this is not an impulse, but a correction. Therefore, dear colleagues, here is how we will act. Once the correction ends, we have waves 1, 2, and 3. And after the impulse and correction, we enter the market with pending buy orders. I'll explain the reasoning, even if we are mistaken here and it is not an impulse, but some veiled correction forming an initial diagonal triangle. The pending order will not be triggered. Waves 1, 2, 3, 4, and 5 should move lower than wave 3. Once we see this, the pending order can be deleted. This is the plan, the scheme. It's simple. Just wait and observe how it develops. I hope everything is clear. If not, please write in the comments and I will always respond. The S&P 500 index has finally reached the level I talked about for a long time, 5,500. The 5,500 level is reached, and now, dear colleagues, we are considering only sales. The only thing to fear is the potential sharp increase in market volatility to catch those smart ones trying to sell, which is us. We will sell and place stop losses somewhere here, so volatility may increase. But dear colleagues, globally we are considering only sales. Look at the option contracts. Everything is at the top, and there are no significant option contracts left except at the 5,600 and 5,700 levels. Down below, there are options worth tens of billions of dollars. Counting them might drive you crazy. The same applies to weekly option contracts. We have a cluster of call options at the top and tens of billions of dollars in put options below. Dear colleagues, if we look at the weekly charts, we will find divergence. We have divergence on the weekly charts. And if we switch to monthly charts, we will see the same. We have a strong, deep divergence on the monthly charts. Interestingly, if we consider the last 2 to 3 years of divergence, we will see that about a year ago, there was a sharp rise. Similarly, 3 to 4 years ago, there was divergence as well. Now I will present it more formally. We are considering sales. Therefore, dear colleagues, managing capital is crucial. Please manage your capital wisely, and you will learn not to lose your money. Even if you do lose money, you will do it very slowly. Manage your capital wisely, dear colleagues. That's all for today. I invite you to the ForexTimes community, where we provide many forecasts based on unique data from the Chicago Mercantile Exchange. We decode strong levels and ranges of support and resistance, where the target levels are. For example, today for the euro, I forgot to mention that the target levels for growth are at the accumulation of call option contracts at 1.210, 1.209 million, and also at 4.70 million. Levels 1.0950 and 1.0990 are the nearest strategic target levels for this trading instrument. Similarly, for two trading instruments, I predict with high probability what will happen throughout the year. I talk about these two instruments in the community. Join the community, and you will learn what these trading instruments are. Over the year or a year and a half, you can trade like professional hedge fund managers and investment funds. You will see why this is likely to happen, and you will be able to document it. over the year or a year and a half, you can really make a lot of money. Join the Forex Times community and earn with us. That's all for today. Goodbye.